My name is Brian Nielsen. I'm the Executive Director of the Blockchain Academy, and today we're going to talk about crypto trading strategies. The first one is going to be to build your portfolio on Bitcoin. The second is that when you see it, bet big. The third is that you should use an index to track your performance. The fourth is that when you have the opportunity, take the profits. The fifth is what we refer to as the honey badger trade, which is basically buying on the dip. The sixth is don't overtrade. There are costs associated with overtrading, so be aware of the impact on your portfolio's performance by overtrading. The seventh is when profits are doing well, when the securities are increasing in value, let it run. And of course, at the same point, if it starts to fall, cut your losses. ICOs are great opportunities, but you have to really do your own research. And the ninth is that you should maybe research microcaps. They have unbelievable upside, but they are incredibly risky. And the last is what they call hold. So let's go through each of them a little bit more in detail. So when I say that you should build your portfolio on Bitcoin, it's because the Bitcoin is kind of the mother lode. It's the original cryptocurrency as we now know them. It has the largest market cap. It has the largest price value. It has a lot of things that are important. Some of the things is that it has the highest trading values and therefore the highest liquidity. The only way you're going to ever encapsulate and capture the value of a particular cryptocurrency is if there's liquidity. If you can trade it, then you have a price. You have a bid and an offer. If there is no liquidity, the value is basically zero. But of importance is this, is that if you eliminate other cryptocurrencies out of all the rest of the asset classes, Bitcoin has been the best performing asset every year since it was started in 2009. Essentially, for the past 8 years, it has been the best performing asset, bar none. So part of it is of course, is on the liquidity. So here what we have is a bubble chart. And this is showing you the percentage volume of a daily's, actually it's today's volume, the last 24 hours, of all the cryptocurrencies. And of course, what you see here right in the middle is that Bitcoin. It has the largest volume. It has the largest liquidity as a result. You can also see that Tether's here, and Ethereum, and Ripple, and Litecoin, and Ethereum Classic, and Bitcoin Cash. They all have liquidity too, and smaller market caps in terms of what's being traded, and as well as the value of the overall coin. But the other thing is that as you start to look around at this bubble chart, you'll see all these little dots. Well, they represent the liquidity of other coins. So building your portfolio with Bitcoin as the base is going to be a prudent approach to and a strategy for building and managing your portfolio. I want to now go to a quote by Charlie Munger, and he's the other half of Warren Buffett. He's the guy that Warren Buffett says is that oftentimes the backbone to everything and the strategies that Berkshire Hathaway actually employs. And he said, the wise ones bet heavily when the world offers them that opportunity. They bet big when they have the odds. So getting back to the George Soros quote, and that is that when you have the opportunity, bet big. The next thing you need to use is a tracking index. It's impossible for you to make a determination as to how successful your trading strategies are if you don't have a benchmark to measure it against. What you're seeing here is this is from cryptoindices.io, and it is a representation of the top 30 cryptocurrencies that are being traded. Now, what's unique about this is the top 30 all have a market valuation of over $1 billion. So there's a lot of liquidity to it. But it averages out all of the performance of each of those top 30 into this index. So you don't have to necessarily own all of the top 30, but this will be a great benchmark for you to actually measure your performance against these top 30 cryptocurrencies. What's part of this is that, and again, this is also from cryptoindices.io, is that the index allows for you to see the 20-day, the 50-day, and the 100-day moving average. And as you can see, as those lines move up and down, these can be trading strategies that you can employ. so that when it's above a moving average, you might want to be buying it. When it goes below, might be an indicator of when you want to sell. The other thing is that it's important to see what the volatility is from a larger market perspective. And so again, at cryptoindices.io, they offer a chart on the volatility. And what this is telling you, though, is this, and it's something we already know, and that is that crypto indices are highly volatile. But when you're using a larger basket of cryptocurrencies, the volatilities tend to become a little more compressed. But as you can see here, there's sometimes a 40% valuation change in a period of a day or two. Our next strategy is to take profits. What I've got here is this is the Bitcoin chart for the past month. And what you can see is this is that it actually peaked at a little over $20,000 and it fell down to about $6,000 and now is currently about $10,200. What it amounts to is this is when you have the opportunity to take a profit, don't ride the train down. Cut your losses. Take the profit when you can, because as you can see by these arrows, the difference between the top and the bottom is almost 60% difference. If you were able to take the profit at or near the top and then turn around and buy at or near the bottom, you would be making your portfolio infinitely more profitable. Here's another example. This is Ripple, and this is when Ripple actually went all the way up and peaked at $3.85. It fell down to like 82 cents and currently is about 96 cents. Ripple went on a wild ride. Well, if you rode that up and then didn't take your profits, you missed out on all those gains. So if you had bought it at, say, at 96 and now it is at 96, your return has been exactly zero. The next strategy is to buy on the dip. And what I've done here is this, is I'm showing you a chart for Bitcoin. And I actually took the last about 30 days here to show what you're seeing here. And what's important is this, is you're going to see that it goes down and it bottoms out about $6,000. Well, if you would have bought at that bottom dip, and then as it turned around and rose up to 11,000 a couple of days ago, but currently 10,200, you would have almost doubled your money in the period of about 10 to 14 days. So that is a strategy that you need to be paying attention to. And the way that you do it is this, is you don't look at hourly or 24-hour charts. You try to take a view a little bit broader, and that is maybe the 7-day chart or the 30-day chart. And the reason why you want to do that is you want to see where the macro trends are. Of course, as a strategy is you don't want to overtrade. And really what I'm showing you here is this is the chart that blockchain.info creates as to what is the cost of the per transaction cost for trading. And as you can see, just recently it peaked at a very, very high amount. The reason why that happened is that as more and more computing power is required to make a transaction, the fees all go up in association with them. What you want to make sure that you do is that you manage your commission transactions, because what they do is they reduce whatever profit you make. So let's say you had $1,000 and you made 10 trades, and those 10 trades cost you $50. Well, really, you have to make that $1,000 has to have a value now of $1,050 because of the $50 in transaction fees, and you're still just breaking even. So be very cognizant of the frequency and that you make trades on, because those transaction fees will impact your returns. And again, so this is let profits run and then cut losses. And what I've done here is this is the Bitcoin chart. I went back, looks like about 3 months in terms of looking at this. And as you can see, there was a huge run up. So that green line as it increases is showing you a trend line as it's going up. They basically call this in the financial sector is the trend is your friend. So as it's rising, it's in your benefit to let it go with it. So let your profits run. But at the same time, and again, this is Bitcoin, just the next segment right after that, is you can see that Bitcoin then is falling in value and now the trend is against you. So if you were able to follow the trend up to the point where it actually then started to dip down, you would have been able to preserve all those profits that you had made. And of course, eliminate all the losses that subsequently came. The next strategy is to look at ICOs. ICOs are an amazing opportunity to make money. You're getting it at an initial discount. It's kind of like the IPOs that are available to only friends of the institutions and accredited investors. This is the everyday man's approach and ability to access great opportunities when there's an initial coin offering. And again, there's hundreds of initial coin offerings happening all the time. There's a great number of sites that you can go to that will give you reviews on them, so that not only is it important for you to understand what's going on, but you can also read what other people are doing. But the second most important aspect of any ICO is that you have to do your own research. You have to look at the team, you have to read the white paper, you have to understand what they're trying to accomplish. How are they distributing the money that they're raising? Is it going to be towards further development, or is it just going to be put into the pockets and they run off? There's already been enough scams out there where people have actually done an ICO, taken the money, and they basically disappear. It's important for you to understand to look at the broader picture, the management team, the use of the funds, what is the technology, who are the advisors. These are all important things to understand on ICOs. The next opportunity for you to take advantage of, and as a strategy, is to really research microcaps. We've shown you this bubble chart before, and this is the daily transactions of the top 100 cryptocurrencies. And as you can see, Bitcoin and Ethereum and Tether and Ethereum Classic and Bitcoin Cash and Litecoin, they dominate it. But all those other little dots represent the market transactions that occurred in the last 24 hours. Now again, this is only the top 100. If you took and looked at, say, those coins that were in the 500 to 700 range, these are teeny market caps, teeny liquidity. But as a result of that, there are huge appreciation opportunities that occur with them. So doing some research is going to be very helpful for you to look at when dealing with microcaps. Our last strategy is called hold. Now you'll notice that it's spelled HODL. Now I had read a few things on the web that attributed it to a Game of Thrones theme, and that is Hodor, for hold the door. The thing that was funny about it is that as I researched it further, and the concept is this, is that you buy and you hold. You don't do anything with it. You buy it, you put it away, you walk away, and in 5 or 10 years you come back and find out if you have a fortune there. But it really does have a purpose here, so it is hold on for dear life. So these are our top 10 strategies that you can employ without a lot of technical ability or know-how in terms of understanding the strategies that you can actually use and employ for your cryptocurrency portfolio. Thank you for watching this video on cryptocurrency trading strategies. If you missed our first 2 videos, now's a perfect time for you to get back and review them. Our next and last video is, are we in a crypto bubble?